I'm joined in studio by Sizwe Nxedlana. He's Chief Economist at FNB. Welcome, Sizwe.
Good evening.
Sizwe, economists had expected growth of 1.6% for the first quarter, but that was way off the 0.9%. What went wrong? What were the factors that brought it down lower than expected?
Okay, so I think the lower than expected outcome is attributable to a steep decline in the secondary sectors of the economy, which fell by about 6.2%. And that in turn was a function of a steep decline in manufacturing outputs, which fell by around 8%. There was also a decline in the utilities sector, which is electricity, gas and water, which contracted by 3%, and also agricultural outputs, which fell by about 5%.
Now, last week, Reserve Bank Governor Jill Marcus said that the Reserve Bank had brought down its growth forecast for this year from 2.7% to 2.4%. Given global and local challenges, do you think that might be revised further downwards?
Well, I think there's a downward risk, definitely. Our growth forecast, incidentally, was also below consensus, 2.4%. So the SAB and us are now below consensus. Given the fact that we have 0.9% as a Q1 growth, there's going to have to be a significant rebound in growth over the next 3 quarters for us to get anywhere near 2.5% type of growth. And so I think that that forecast is facing downward risks.
Now, it seems as though from the economic data, there were more sectors in positive growth territory than there were those in negative. So do you think perhaps going forward, given a few blips that occurred during the first quarter, that there might be a better number?
I think that going forward, we should see some rebound. Today's number was exacerbated by some, as you allude to, one-off shocks. For example, in manufacturing, we know that there were some disturbances at a big steel plant. We also know that there were disturbances at some refineries in the Cape. So to the extent that some of those one-offs unwind, we should see some rebound in manufacturing and also in overall GDP. But to get to around 2.5 GDP growth, there will have to be a significant rebound over the second half of the year. Now,
very significantly, the rand, it dipped further, breaching the 9.70 to the dollar level. Do you see that getting any worse, or will that retract when people calm down about the number?
Look, the rand is like a share price for a country, and it reflects what's good about a country and what's bad about the country. At present, the rand is reflecting large twin deficits, and that essentially means that we are exporting or importing more than we export. It means that we are essentially living beyond our means and therefore supplying an excess amount of rands to the rest of the world.
I'm worried about time. Inflation, the impact on inflation of the rand in the short to medium term.
Inflation, or the impact of the exchange rate on inflation, it depends on the context in which the exchange rate depreciates. The current context is one of weak growth, where core inflation should remain capped, and a context of commodity prices that are coming off the boil, where we know that, for example, international soft commodity prices are also likely to come off. And so I think at current levels, what the rand will probably do is prevent a more meaningful reduction in an otherwise already benign inflation environment.
Understood. But now, assuming that inflation does continue to be on the upside, as was alluded to by the Reserve Bank Governor, do you think, given the lower economic growth that we're seeing, is there any chance that the Reserve Bank will have space to cut interest rates this year?
It's significant that the Reserve Bank last week reduced its growth forecast to 2.4%, signaling an even greater concern about the growth outlook. I also think that it's significant that the SAB saw fit to reduce its inflation forecast. So I think the rand is actually holding them hostage from reducing rates further. I think should there be any good news coming out of the mining sector, which leads to some rand consolidation, that the odds of a rate cut increase significantly.
Thanks very much for your time, Sizwe. That was Sizwe Nxedlana. He's Chief Economist at FNB.